Thank you, everybody, for joining us today. As you all know, our mission is to provide organizations with the tools that you need to succeed, and financial wellness is definitely one of those. We're very excited to have Mike with us today. We are excited to announce we have 2 new programs that we're going to be adding in. So after the first meeting of every month, which is the first Tuesday. This one is June 2nd, where we'll be having Mike Sheila then about how to be a successful LinkedIn prospector. Afterwards, we're going to promote you all to panelists so we can see you and actually have a virtual meeting so we can meet you face to face, talk to you, and actually develop more of a personal relationship with you, as opposed to just you seeing us and being quiet ears in the background. We'd love to get to know you more. Secondly, afterwards, from 1 to 3, we'll be having, we will be available. If there's anything you want to talk to us about, we'll send out a link to it. You can sign up and talk to any one of us about anything going on in your business life that we can possibly help you with. So look out for announcements about how to sign up for that. And with that, our current topic. Grant, you want to introduce Mike?
Yeah. Well, want to give a big thanks to Mike Cammarata for coming on and sharing his expertise with us and the audience. So Mike's a certified financial planner, and he's a partner at Tide Creek Financial Group, which is a financial planning firm based in Elk Ridge, Maryland. He's been a financial planner for over 13 years. He and the firm have been providing financial education for people in the workplace for over a decade, and they've worked with employers such as McCormick, Georgetown Universities, and other large institutions, as well as plenty of small businesses and individuals as well. Today's workshop is going to be focusing on addressing the financial wellness during the current economic and global pandemic crisis. So with that, let me turn it over to Mike, and thanks again.
Grant, thanks a lot. Appreciate the introduction. Give me a second here, and I'm going to share my screen.
All right, and everyone, as we go through this, if you have questions, hopefully you're familiar with enough by now, please send them to us and we can interrupt Mike at certain points and ask questions for you.
Yeah, please do, because I certainly want this to be interactive. I think everyone gets more out of it if they're asking questions as we go through. So can everyone see this?
Yeah.
Okay, great. All right, so let's take a look at the agenda for today. I'm going to cover 5, I would say, basic topics when it comes to financial wellness during this pandemic. I will also touch on the Family First Act and the CARES Act and where that fits in with financial wellness and personal finances. So the first topic I want to cover is savings. Now, savings is really the backbone of all of our financial strategies and plans. And it's really important, especially in times like these, to make sure that your savings isn't the first thing that you're cutting, but hopefully continuing with those same saving efforts as before. Now, what that may be or what it is that you may be saving towards could be different with each person, each different set of circumstances. Now, the first thing that when we're working with someone individually and doing financial planning, one of the first things that we look at is whether or not they have an emergency fund. It is so important. It's very commonly overlooked. And it's one thing that we recommend to everyone that we're working with. The next area of savings would be retirement, which, hopefully everyone has the ability to save for retirement. Based on your time horizon or your time frame for retirement, you may be putting in very little, you may be putting in a lot, but that's probably dictated upon your personal plan and when you plan to retire. Then also if you may be, considering a large purchase in the short term. So if you know that you're going to be buying a home, let's say in 3 years, and you want to make a down payment, that you are putting money aside for that down payment for that large purchase. And then the fourth thing would be college funding. Now, my personal opinion on college funding is that, it's great if you have the capability of doing that, for either child, grandchild, whomever you may be saving for college. But I would place the first three in priority before you would save for someone's college. So emergency fund first, saving for retirement second, large purchase third, and college funding fourth. Now, another thing that we look at when we're first working with someone is their budget. So, especially during times like this, where your income may be reduced, it may have stopped, it may be paused. The one thing that we have the most control over is how or where we are spending our money. So what I advise people to do is really take a look at their typical average monthly expenses and include everything. Now, the best way to figure out where or how much you're spending is by looking at credit card statements as well as checking account statements, because most likely you're having things automatically drafted from those two areas. So if you take a look at, let's say, the last 6 months, put that down on an Excel spreadsheet. Now, I know I've done this personally. Most of these companies allow you to download the statement or the transactions in an Excel format. Go ahead and do that and basically list, all of these different expenses and start with recurring. So start with the things that are going to come out every month, list them down. Then try to take an average of the things that are not recurring. Once you have this list, then separate them between what are necessities, what are the things that we have to spend our money on in order to stay in our home or to be able to get to work or to be able to put food on the table or keep the lights on. Those are your necessities. Then list everything else as discretionary or luxuries. Then you have two different categories of expenses. And you can then evaluate, well, if my income is being reduced or it has stopped, where can I cut in times like this? And if you know where your discretionary expenses are, then you might be able to take action and cut what needs to be cut, at least for the time being. Now I'm going to talk a little bit about the CARES Act. The CARES Act, it is basically, I'm sure we all have heard of the CARES Act at this point. The CARES Act was actually the third law to be enacted to alleviate the impacts of COVID-19. The law enacted prior to the CARES Act was called the Family First Act. And there are several benefits that come from these two acts. So I'm just going to call it under the well-known banner CARES Act. Now, as I'm going through these, you should obviously consult with your tax professional or your attorney to talk about your specific situation and how these may play into your personal finances. But I am going to do a quick overview of these. So the first one is the emergency paid sick leave. What that does is it allows for additional paid sick leave time due to qualifying COVID-19 leave. And what this can do, it can help keep income in place during an extended recovery time. The second one is the emergency family and medical leave, which allows up to a 12-week paid leave in the event that an employee cannot work due to qualified COVID-19 event. The third one is the pandemic unemployment insurance for the self-employed. which makes unemployment insurance available to qualifying individuals who are traditionally not covered employees, like independent contractors and other self-employed persons. The next one is the charitable deduction changes. The first, a partial above the line charitable deduction is allowed for those taxpayers that do not itemize their charitable deductions for up to $300 to qualifying charities. So for those who do itemize, the 60% AGI limit of cash contributions is waived for 2020. And lastly, the recovery rebate provides stimulus money to most taxpayers. The amount that you will receive depends on either your 2018 income tax return, if you have not yet filed 2019, or 2019 if you have.
Hey, Mike, quick question on this.
Sure.
One of my friends got furloughed and their work said they should be able to get unemployment. Is that true, or can you elaborate on that?
Yeah, and I mean, that's been a case-by-case basis. The, what I have heard and what I have seen is that there are people who are able to not only qualify for unemployment, but, they are also, compared, and I got to take a step back there. Some people who also have not been furloughed. So to answer your question, yes, that is true, that they may be able to collect unemployment when traditionally they may have not been able to collect unemployment. What I have also heard is people who, let's say, have tested positive for COVID, they had the choice to either come back to work or collect unemployment. And for some people, collecting unemployment with these extra benefits, they're actually making more of an income than going back to work. So it's very interesting, but yes, they certainly have expanded unemployment, and they're doing whatever they can to continue income coming in. So I'm going to touch briefly on the recovery rebate. So generally speaking, the recovery rebate will provide up to $1,200 for each tax filer and $500 for each qualifying child. So the amount that you ultimately receive will depend on a number of factors. It depends on how you filed, if you filed, how much you made, and how old your child is. So right here is basically a graph based on income and qualifying factors that would determine how much of a relief rebate you would receive. Once again, you should probably consult with a tax advisor or an accountant to figure out what you qualify for, because it's based on those factors. Now, what you do with that rebate is up to you. You could save it, you could pay down debt, you could donate it. If you don't do any of the above, you could certainly spend that money and hopefully boost your local economy.
Hey, Mike, I got a quick question. Is that the rebate you're talking about? That's the rebate that most people have already received, or are they still out there and people are waiting for those? Where do we sit on that? And then the second part of that question is, I had heard rumors that they were talking about a second rebate. Is there any truth to that?
So I would say this is the rebate that people have already received. And yes, there is certainly discussion about taking further action to support both individuals and businesses. What they said was I think the last act that passed, that might have been, the fifth inning of a 9-inning game, if we want to use, baseball terms, which I hope returns very soon. But yes, there certainly could be more relief on the way.
Awesome. Thank you.
Not a problem. So let's touch on debt because, obviously so many people have been affected financially due to either a reduction of income or a loss of income that, they got to continue to pay their bills. So it's very easy in times like this to accumulate debt, especially credit card debt. So the one thing I would say is really, really try to continue with maintaining your existing debt management plan. Hopefully you have a debt management plan in place. And really, if you have to put things on a credit card, it is what it is. Do some investigating, find the lowest interest card that you are able to qualify for. If you are able to transfer existing credit card balances to a promotional 0 APR balance, that may be something that you should consider. It just really depends on your personal situation. But really stay focused. Don't let it get out of control if you can. And because the interest that you pay on credit cards, there is nowhere else that you could put that money to be able to counterbalance the interest rate that you're paying. Couple of things just to be aware of, limit the use, minimize the amount of new debt, reconsider how you view debt, and investigate refinancing or, transferring that balance to other lower interest programs. So it looks
What
like.
do you mean by reconsider how you view debt? Like, what would be a new way of viewing debt?
I'm sorry, again?
What is a new way of viewing debt that I can reconsider?
A new way of viewing it? Well, a lot of people, they would view it as, I will buy what I want now and pay for it later because I have the income coming in. I would take a more old school approach. Don't buy it unless you have the money on hand. Especially in times like this where there is so much uncertainty, I would really try to tighten the belt and trim wherever you can and not have the same spending habits that you may have had prior to this crisis.
I personally like using credit cards because I get like percentage back when I use my credit cards.
Mm-hmm.
So it saves me money that way. But how would you balance using credit cards to get those savings versus it seems that you don't like using credit cards?
Yeah, and I do the same thing. I use one credit card for all my personal expenses because I get a percentage of cash back on every purchase I make. What I do though is I make sure that I am staying within my budget. So even though I am putting all my expenses on that card, or at least whatever I'm able to put on that card, I make sure I pay that credit card bill off every month. I really don't allow a revolving balance to keep accumulating. So at the end of every statement, I go in and I pay it. And I pay it well before the due date, also because if you pay it early enough, you're not charged any interest.
Okay, thank
That's
you.
how I go about doing that. Now, another question I also get, well, what if I have multiple credit cards? How do I go about managing multiple credit card balances? My suggestion there would be create a spreadsheet of those credit cards and list the, who it is that issued the credit card, list the balance, and then list the interest rate. And then filter that list to where you have the credit card that has the highest interest rate at the top. And that is the one that you should be paying down first, while still continuing to make minimum payments on all of the other cards. What I see a lot of people commonly do is they're trying to tackle all of their credit card debt at one time. It's very overwhelming to try to do that and to keep up. So start with the one that has the higher interest rate, pay it off, go to the next one, and keep working your way down until eventually you will have paid off all of your credit card debt.
Mike, is there a benefit to having, again, if you're using the credit card as kind of a crutch throughout the pandemic, is there a benefit to kind of spreading it on multiple cards so you don't have a large balance on one card, or would you be better off if you have the availability of credit to put it all on one card so you're only managing that one?
I mean, personally, I think putting it all on one is easier to manage. Even if you have multiple lines of credit or multiple credit cards open, the way that the credit scoring agencies look at credit is they look at all of your available lines of credit and your total balance. So whether you spread that out on multiple cards or if you put it all on one, it's the same debt to equity ratio. I just personally know, that for me, keeping it all on one card is just easier to manage. Good question.
Thanks.
So let me touch on a couple of other benefits that the CARES Act is providing. Federal student loan payments are deferred until 9/30/2020. Employers can actually help pay down employee student loans up to $5,250 per employee. And this is through the end of 2020. And they do not have to basically list that amount as, because typically if an employer did that, it would be included in the employee's income. For the year 2020, it would not be included in the employee's income. So for the employers out there, that could be a phenomenal benefit that you would be able to give your employees if you were able to do so. Let's see, what else? If you expect a refund from the IRS or maybe you don't owe any income taxes, I would say file your income tax return as soon as possible. If you expect that you will owe the IRS any income taxes, you may want to consider holding off filing because the new IRS deadline for 2019 taxes is July 15th of this year. Also, many state governments are also taking steps to help residents who are negatively impacted by COVID-19 manage debt obligations. I would advise contacting your state government for more information about those local options that may be available to you. I am going to try to get through the next slides very quickly. Now is a really good time to look at your insurance coverages. Make sure that your insurance coverages are accurate, are adequate, and also shop around. I mean, anything you can do right now to reduce expenses, you should consider. So let's say you're in a situation where you may not be able to pay for some of these insurance policies. Contact your insurers. Find out if they will allow for a grace period. Speak with them. They may allow you to defer payments. Alternate payment options may be available. For those who may be paying for whole life insurance policies, there could be cash value inside of those policies that may come in handy right now. You might be able to take a loan from them. You may be able to take a withdrawal from them if need be, rather than going to other areas or accumulating debt. For those who are considering purchasing insurance during this pandemic, some policies are very easy to purchase online. Temporary coverage may be available, as well as expedited underwriting procedures. Let me get to investing because this has been a big topic. People are asking, what are you telling your clients right now? Things are crazy, what do you do? The first thing I tell them is not to panic. Panicking and making decisions based on your emotions is never a good thing, especially when it comes to investing. Hopefully prior to all of this, you have done your due diligence or you're working with someone and the investments that you're investing in are aligned with whatever your goals and objectives are. Don't let the market dictate you making changes to that investment portfolio. You know, if it was already in line, there is no need to change. So don't panic, be realistic about the expectations when it comes to investing, plan for the long term. This is just taking a quick look at the last two financial downturns. So from 2000 to 2001, there was a 38% decline. And if you take a look, it took 48 months to recover, 2 years. A lot of people sold at the bottom. They wanted to get out of everything because they couldn't take it. Well, very quickly, it came back up and it surpassed where it was prior to that. So if you have a long-term time horizon, don't panic. Don't make major changes to your investment accounts or your investment portfolios. Now's the time to be looking at rebalancing those accounts. So there's been a lot of changes, a lot of volatility. Go in and rebalance to the prior allocation that it was prior to this pandemic. What you're doing by rebalancing is you're selling now what's high, buying in what's low, you're rebalancing. By doing that over time, you're going to get a better long-term return. Also consider or continue dollar cost averaging. What that means is as you're contributing, whether it's to your employer's retirement account or outside of your employer's retirement account, don't stop that if you can. If you can continue doing that, keep putting money in because you're buying in at different points of the market and you're buying some things at a bargain based on where the market is the day that you're buying in.
Hey, Mike, real quick, we got a question going back to credit cards that we want to answer before we run out of time. Mm-hmm. The question is about managing credit cards and how do you optimize your credit score with credit cards? So is it better to pay off and close a credit card if you wind up having a balance on that for a while? Or do you want to pay down, if you have debt on multiple, pay one down or pay them all off at the same time, kind of equally?
Mm-hmm. Very good question. When you pay off a credit card, do not close it because the credit agencies look at that as equity. So if you have an open balance, that's considered equity. So don't close a card once you pay it off. In terms of multiple credit cards, I mean, if you have the ability to pay them all off, great. I think it's much easier paying one off at a time based on the interest rate. Pay the one that's the highest interest rate first, and then continue to work your way down. But don't close them once you pay them off.
Got it. Good point. Okay. Excellent.
Yep.
Thanks.
Good question. Well, we are at 12:30, so we are out of time. The only topic that I did not get to was retirement. And basically, just to summarize what we are telling people is, you know, if you are within 5 years of retirement, make sure that you still have goals that you want to set. Figure out your retirement budget based on your current budget. So figure out what expenses are going to translate into retirement or transfer into retirement, which ones are not, and identify your income sources. Figure out where that potential gap may be. That can help you better manage your savings, your investments for when you plan to retire. For those who are already retired and your investment accounts may be affected by all of this, look at your lifestyle. Has it changed? Well, we're not all going out and doing things anymore. So maybe your expenses have gone down dramatically. So because of that, for those who may have been taking money from retirement accounts in a systematic way, pause that. You know, you might not need that money right now. So don't take that money. Don't sell investments that have gone down in value because of the volatility. Also, for those who are over the age of 70 and a half and now over the age of 72, who had to take required minimum distributions from IRAs, that has been suspended for 2020. You do not have to take those required minimum distributions this year, and you don't have to make them up in any subsequent years. So for those who don't need that money, don't take it because otherwise you're going to pay income taxes on that distribution. That's the gist of today's workshop.
Awesome. Thank you, Mike. Really appreciate it. I think the last couple of things of all the changes, especially retirement and throughout, that have happened in 2020 and probably will continue to happen are extremely important. So, definitely keep your eyes out for it. If you have any additional questions, you can always reach out to Mike or any of us. There's Mike's info. Again, I wanted to thank everybody for coming tonight. I saw some new names on our list, so really appreciate you guys checking us out. We'll be back again next week. Again, every Tuesday at noon for our Lunch and Learns. Next week is Ben Kimbrell from the Global Harvest Network. He'll be talking about protecting your data with a remote workforce. The cyber game has changed. And also remember June 2nd, which we have more great events and more great topics lined up. But June 2nd, we will be staying after to do a little bit of face-to-face networking. So, feel free to book out a little extra time, and we're going to be putting out some more information about ways to maximize what you're getting out of our Lunch and Learn session. So again, really appreciate Mike, all the great information you share, the rest of the team for all their help, and everybody for joining us. Have a great rest of your day, rest of your week, and we look forward to seeing you guys next Tuesday, and feel free to reach out with any questions you have after the fact.